Good evening and welcome to the Australian Stock Market Show. With sellers coming in late last week to close the All Ords in the red, have the bulls finally run out of steam? Stay tuned as we discuss our thoughts on that shortly. We'll also take a look at the Australian sectors, and for our main topic in tonight's show, we get into the top 10 growth stocks in 2025, Macquarie Bank, Rio Tinto and ASX. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you answers to some of the most important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Rio Tinto, Macquarie Bank, ASX, the sectors on the Australian market, and more so. Get comfortable as we'll get in those soon. I'm Philip Tortevsky and I am your host for tonight, and joining me are Wealth Within's highly experienced analysts and professional traders Janine Cox and Pedro Bernales, and together we are Australia's most trusted stock market educators. Good evening, guys. How are you?
Good evening. How are you?
I'm good. Janine, how are you?
Fantastic, and looking forward to seeing what's happening on some of the stocks out there, given that China's just pulled another one of those levers.
Yeah, almost. Yeah. They're almost about to get it going.
See if we can get that material sector cracking. That's what I'm looking forward to. But yeah, great night.
Great night, great show. All right, tonight, as mentioned, we get into the Australian sectors, but first, let's take a look at this week's hot stock tip. Now, Pedro, I know last week, we've got to give you his moment to brag, Janine. Stock went up 30, 40%. Please tell everybody.
The following day, wasn't it?
Yeah, the following day, and it wasn't me pumping it, I swear. I hope that somebody bought it. Maybe it was one of the viewers that actually, believed in it so much. But I hope that you got into it because that one did fantastic. Hopefully we can pick another one tonight.
You've got to do another one tonight.
I got to live up to the expectations. I got to live up to your expectations, right? The drone shield. But let's see if we can do another one tonight. So the hot stock for tonight is AI Media Technologies, and that's ticker code AIM. So let's get straight into it. So on your screen right now, we've got market index. And you can see that it's a stock in the industrials sector. I would have thought that it was the technology sector, but there you go. Not much information about dividend yield or PE ratio, although it is down today, 2.89%. But that just could be, a little bit of a buying opportunity. So let's see what the chart says. Now, the market cap is 175 million. So we are getting to that lower end of the market cap. So this is one that isn't that big. But I do want to, isn't that a surprise?
Scratch.
It's not to $1, so Janine's not even interested. I've lost Janine already. So I really just want to highlight what they do because it is quite interesting. So if we can get back into it. It's a global provider of technology-driven captioning, transcription, and translation services. So basically, it's an AI that will automatically translate things. So, I could be talking Spanish right now and you'd be thinking I'm talking English, So it's it automatically does captions and so on. So it's quite exciting, and it's in that AI space, which, a lot of, potential. So let's have a look at what the chart is doing, shall we? So on your screen, we've got the monthly on the left, weekly on the right. I've laid out some levels there, and you can see that when it first came out, it was only recently, 2020, and it went up, did an all-time high of $1.40, only to tank, as many do. However, after having a bit of a period of sideways consolidation, it is starting to get some momentum again, and it's creeped up to that, just under that dollar mark, that 90 cents, back to where all this congestion was. So we can see on the weekly chart that it has stalled a little bit, but this is quite an interesting pattern at the moment. It's not wanting to break above that 95 cents, but it is consolidating nicely, and it's looking like a nice pattern to break out into. So I'm thinking that if it does break out, it could face some possible resistance at that $1 level. It could consolidate a little bit sideways again, and then we could be out, off back to the all-time highs. And if that does happen, we could be looking at a potential, extra 30, 40%. If it does break out of here to the next resistance level, 15. So yeah.
So are you saying this stock is ready to go now, or is this something to keep on the watch list and wait for that break above? Because it's had a decent run already by now.
Exactly, yeah, that's a good point. So it's had a very good run.
But it could repeat it, that's what you're saying.
It could repeat it. So if just say, you know, out of this consolidation here, it's done around that 100%. And, you know, that's quite a fair rise. But what I like is that it's consolidating in a tight range, and it's not wanting to fall below that 70 cents. So,
but what if it did? Like, I personally would prefer to see it come back below that.
But even below 70 cents, I think that below 70 cents, around that level there, if it's below that, I wouldn't be interested anymore, to be honest. I'd like to see it hold up about that, around that 70 cents, get an opportunity and rise up.
Okay.
Did you have any other thoughts on this, Janine? Because
oh, look, it's sort of a stock that's out of my area, so it's Pedro's expertise. So
you're not taking any responsibility for this one, right? I'll take the full responsibility then.
There you go. Good stuff. Fantastic, Pedro. All right, well, that is it for our weekly hot stock tip. Now, shortly, we will get into our topic for the night. But before we do right now, it is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise call us. So call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller in the show right now gets a free copy of Dale's book, Accelerate Your Wealth, and Janine's putting in her hand to weave in a bit of extra magic there. So pick up your phone and dial 03 9290 9988. Now, while we do that tonight, we will give you our thoughts on these sectors in the Australian market. So let's get into it.
On your screen right now is a watch list of the sectors in the Australian market. So on the screen there, you can see the ticker code on the left-hand side. We've got all of those listed there. And then the name of the sector. And to the right-hand side, I've got something a little bit different there. This is the yearly range showing you how far the sector is in its yearly range. Now, we know that materials and energy have been lagging, and as well as consumer staples down at the bottom. But at the top of the range at the moment, infotech's no surprise, and financials following fast behind. We've seen the banks putting on some incredible gains in recent months. That could settle down for a little bit before we see the next run up. Consumer discretionary, a really nice 23.35%, which is lovely to see. Consumer discretionary up. So obviously, even with high interest rates or supposed high interest rates, we're still seeing consumer discretionary stocks doing well. Although I'm hearing from people in some of the industries just walking into a shop and walk up to someone and say, look, how's it going today? How's the selling going? What's happening out there? What are the buyers doing? Yep. And they're telling me that people are far choosier right now, and they're actually pushing back a bit. So instead of saying, oh, look, I'll have that TV and I'll have the microwave and I'll have the blender, they're just saying, no, all I want is a TV and I don't want anything else. Whatever it is that they're choosing. So it's really interesting how buyers are not, their arms are not being twisted.
It's an interesting point you raise, because is that a sign of the times we are in, and what does that mean moving forward? Or is that, you know, too much choice, people being spoiled?
Well, I think it's still buying, but just being a little bit more cautious about what they're buying.
Well, another interesting point, I mean, we did a report on this, the Black Friday sales are one of the biggest ever this year, but that actually highlights that the cost of living crisis, that people are actually waiting for those sales to really spend that money. So we could have a very good lift in the consumer discretionary sector, because people have been holding out the whole year to spend their money now.
I mean, we know that most of the retail spending happens in the last quarter anyway, and the GDP growth that we get out of that, you know, it's a bit sad, but that's where a lot of it comes from, especially for Victoria. So, I mean, you know, what's going to happen in the new year then? It's all a big question, isn't it?
Well, we're going to get into that shortly. But any other sectors that are of your liking? I mean, IT continues to fly, and it doesn't look like there's an ending in sight at the moment.
No, look, I think that's going to be continue to be the case going over the next couple of years. We'll see that even if there's some consolidation that happens there. Look, I think if you look in the middle of the range here, we've got utilities and healthcare. I can see some opportunities there. There's some good growth there, but not knocking, you know, punching the lights out to the point where you might get a single-digit growth coming up. This could still have good growth ahead. Communication services, you know, we look at stocks like Telstra, That's an interesting one there. That's just looks like it's setting up. Consumer staples, we've seen Woolies pull back significantly while Coles has jumped ahead. I mean, that's just a big, occasionally in history that happens. We often get them going together at the same time, but then all of a sudden you might see them split out and one goes up and the other one goes down. So I'd just be watching the one that's gone down and waiting for that opportunity.
Well, Woolies has had that negative sentiment around the worker issue that you had mentioned the other day. But to me, the one that stands out, and I want to get
was that on your market report, was it?
Yes, Woolworths.
Okay.
Yes.
So
go and
check that out.
Yeah, please make sure check that out because we've got good detail on that one. But to me, what stands out of all of them from a macro perspective is the materials. Now, we just spoke recently about what that catalyst might be in 25 to send that forward.
We're already starting to see that it happen with China making that announcement.
Well, you took the words right out of my mouth.
Yeah.
Is that the catalyst?
But you know what? Next year is the year of the snake, isn't it? So
Is it?
what does that mean on the Chinese calendar? They've started to say that there's that they're going to stimulate growth or stimulate what's happening with consumers internal in China. So will that really be followed through in the year of the snake?
Well, I think we're going to focus more on charts and fundamentals rather than the dragon years. But anyway, that is it for our thoughts on the Australian sectors. Now, before we get into the first email, remember to get your questions answered live on air. You'll need to text or call into the show. You can also send your email to info@wealthwithin.com.au and we will answer them in next week's show. Now, let's get into our first question. Jimbo has a query on breakouts. We seem to be getting quite a few breakouts recently from consolidation patterns, and I've noticed that often the price action can rise quickly, limiting profit potential. I'm interested in your thoughts on placing a conditional order to capture these breakouts before the price moves too quickly. Or would it be safer to wait for a pullback after the breakouts and then enter on a secondary buying signal? All right, Janine, I mean, it's not a, simple email. It's great that there's thought being put behind this because when you're talking about patterns, there are two very real formations that happen. It's as he's mentioned, they can blow through on the initial move or they can come back and test.
Yeah, I like the thinking there, Jimbo. And, the fact that it's actually breaking out is probably a good sign saying that there's more to come anyway. So there's the first point there. But it's about actually understanding how far a stock could run in one of those breakouts first. So if the upside has been eaten up by that initial move out, maybe it's the trigger, of the breakout that's the issue. I mean, are you getting in, is it gapping up when you're looking to get in, or is it just trading through that level, therefore you could go in intraday? I mean, what is it?
He did mention, is it worthwhile placing a conditional order before in the market waiting for it to trigger at that price so he can capture that move when it does happen.
Yeah, that's
thoughts on that?
That's a bit iffy in itself in that if you do that, then it might just gap through anyway. It depends on the type of stock. So I'd look at the stock. Is it a stock that tends to gap a lot? If it does, then the chances of you getting it are probably slim. But I thought he was meaning looking at an opportunity to get in before it actually makes the break. Because sometimes you get these different pattern formations that we teach and there are opportunities to get in before the top of the pattern if you're looking for the right trigger. So that's the other side of it.
Yeah. Well, I think his question was specifically on should you be setting conditional orders to get involved or try and get that second move once it pulls back. Thoughts?
Yeah, so I would actually, if that's what your back-tested rules are, you could place that conditional order. So say I would buy at a maximum of $6, just say that's the top of the pattern. That's the maximum that I'm allowed to pay, that I'd like to pay for it. If it does gap up, then you won't get filled, and that's quite fine. You'll just have to think of how you can re-enter again. It could actually come back down and fill that gap, and then you can enter again if you find support at the top of that pattern. But there's different ways that you could enter on that pattern, and we do teach that in the course. There's several different rules that you can use on a breakout of that pattern.
I would have loved to see the example that he's talking about.
Yeah.
Like, give us an example, Jimbo.
Yeah,
now,
definitely.
just quickly speaking of the course, you mentioned it twice. We do have a special on at the moment for the share trading and investment course. So if you are interested in getting involved, now is the best time because we do have, as we said, a very good discount going on. So go and have a look at the course and get involved.
Good opportunity there.
Yes.
For anyone to start.
All right. Fantastic. Well, there you have it, Jimbo. You've got getting on the conditional order is fine by the team, but also waiting for the pullback is also a good option. Now, we do have another email from Bill. I would like to hear your views on ARX. I'm not currently in the stock, but if another buy opportunity presents soon, I will consider adding this stock to my short to medium term portfolio. If it continues to rise from the current price, I anticipate the first resistance level at about 90 cents and the second at about $1.10. If it falls from here, the first support level is around 65 cents and then around 60 cents. Should I proceed with caution? Pedro,
All
what
right,
do you think, mate?
Bill, yeah, great questions. And I like that he's actually put his resistance and support levels in there. So we've put those on the chart. Let's have a look at the chart and see what's going on. Now, this stock isn't very old. Again, from 2020, it's had a long-term downtrend here, and it does look like it's coming out of this bottoming pattern here back in August of 2024. So I understand why he's proceeding with caution, because the sentiment is still quite bearish, and you can see that this month, it's trading on the low, and it looks like it's about to close on the low, and there's a bit of a reversal going on here. I didn't quite want to make it above that high of 75 cents.
And look at the reversal that happened last time it broke up. It actually reversed
Yes.
all of the range and went lower in 1 month. So
Exactly, and even the high before then, back in 2023. So it's a very similar reversal where it closes, it opens high and then closes low.
So is this short? Should this be short term in nature if looking at this stock, or do you think it should be medium?
Definitely, I wouldn't mind it for a medium term, because it does look like it has trended down quite nicely. Although if it does trend up, then it could be that it could trend up quite nicely as well. You can see this long-term nice downtrend that you could have actually put a bit of a momentum line coming down there, and you could have bought on that breakout there.
Yeah.
However, you would have been out, roughly around here. You would have made a little bit of a profit.
But look at the level that it's currently trying to come back to now. If we're looking at this line across, it's gone crazy on me. But you just come across here, you can see that there's
Yes.
support there. It's come
Support,
back to that line. It could just as easily turn around and take off again.
Definitely, I do quite like it, and it's.
I mean, when you and I were looking at this before we came on air, you said, "Oh, why didn't I pick this one for my hot stock?"
Yeah, exactly. There you go, Bill. I do like your pick, and look at that. So we've got another close above the trend line.
So just wait for it to
So
turn
almost
around.
there.
Almost there.
Almost there, Bill. All right, great advice by the team. We do now have a caller on the line. Reese, welcome to the Australian Stock Market Show. Who have we got on the line?
Hello.
Hello, welcome to the Australian Stock Market Show.
Hey, thanks for having me.
Who have we got on the line?
Reese.
Reese, thanks for calling in, mate. What's your question for us today?
Hey, so it's just a generalized question. I was wondering that when a stock has made its initial run in making a new all-time high, how do you know if it's too late and you've missed it compared to if it's going to continue to keep breaking the new all-time high?
Good question. All right, well, I'm going to pass this one on to the expert Janine when dealing with all-time highs, but thank you very much for your call. Now, it's a very interesting question because we do know stocks trading at all-time highs, although they can run on in bull markets, they also do have the tendency to fall away. So
Yes, exactly. And I mean,
how do you
that's
judge
the
that?
challenge, isn't it? Because it's either you've got to make a call if a stock breaks out to a new high, just have a look at your risk, see where that would be, look at where your stop loss comes in, where's the upside. You've got to actually, a lot of people don't realise that because there's no chart above the top of the all-time high, they think, well, how in the world are you able to analyse that stock? But there's a lot of analysis that goes into that when you have the skills and the ability to do it, and you can get that at any stage. You just talk to one of our educational consultants and they'll put you on the right track. But it's just about doing the analysis above the all-time high. So you find price clustering above the all-time high, you find some really strong levels, and then you know what the upside potential is. You know how volatile the stock is, so you look at how far does it swing in price when it pulls back to get an idea of what your risk is to the downside if you were to take it through the all-time high. It's all about upside and downside.
And can I even ask, get your thoughts on this, Pedro? I mean, are you looking to that left-hand side of the chart, how that stock moves into the all-time high? Because there are multiple of different scenarios on the way a stock can form into an all-time high. It might be 90-degree vertical and might be trending beautifully on a sustained gradient. Does that play into whether you determine this move to the all-time high is one that I should be looking at reversing or staying away from or getting involved in?
Yeah, great point. So, and actually I was going to ask, so first of all, how much percentage has it gone above the all-time high first? Is this the first time that it's gone above the all-time high? If not, what has it done in the past? So that's going to give you the best indication or the best probability, because trading is exactly that, it's probabilities. And you're applying the analysis to turn that to your favor, to allow you the best probability of what the stock is going to do. So I would say, if it has done it in the past, yes, measure those. Does it usually pull back after it's the all-time high? How far above the all-time high is it now? I mean, has it gone up 30, 40, 50% above the all-time high at the moment?
Or is it just 5 or 10?
Or is it just 5 or 10? Has it just broken out? And what does that bar look like? What does the volume look like? So there are a range of things that come into play here.
Well, hopefully that answers your question there, Reece. But great question anyway. Now, with the Australian market trading near fresh all-time highs recently, now is the perfect time to share our top 10 growth stocks which are likely to outperform the market in 2025. We'll give you our thoughts on Macquarie Bank, Rio Tinto, ASX. We've also got some tech and healthcare stocks in there too. So let's get straight into it and start off by clarifying what our version of a growth stock is. Now, Janine, I'm going to go to you on this one because there are so many versions of what people call growth stocks.
True.
What do they mean to you?
Which makes it really interesting, doesn't it? So that means I can pick anything.
Yeah, I mean, you're going to pick the right thing.
A growth stock is one that's going to give you capital growth. That means that there's a stock that will you'll be looking at for growth rather than income. It's one that it may actually not be making a profit as well. Sometimes you can find these growth stocks that are growing in value, but they are not making a profit. They can be a higher risk than some of the value stocks that are out there that are paying a dividend. But the market or the industry generally say that a growth stock is one where you expect the company to actually generate earnings faster than the market average. Now, we just think about what does the chart tell us, and that's going to tell us a great deal more than just looking at what a projection is, which can change.
Yeah, absolutely. All right, this is very important because the strategy you set can be quite different depending on whether your criteria is growth, as Janine said, income, or both. So let's now take a look at some fundamentals from a growth perspective to see which stocks are shaping up nicely. Now, Pedro, I know you've got a very nice watch list going on there.
Yeah, definitely. It's a very interesting thing. So on your screen right now, we do have a watch list of some stocks that we picked out. On the left, you can see the ticker code. There, right next to it, we've got the company name. Market cap, that's just how large the company is, and that's denominated in millions. So that's a $3.7 billion company there. The last price, the percentage change during the year. So it's a yearly watch list. So it's actually been down 43% over the year. And then we've got dividend yield, PE ratio, and the yearly range. So there's multiple things that you can use to filter stocks, in this watch list. You could use the PE ratio. So you can say, all right, if we click on here, put the PE ratio from largest to smallest, you can say, all right, I only want the stocks that are within that 30. The average at the moment, what is it? It's 20%, 20 PE ratio in the market, I think. It used to be 15. It's gone up a little bit. So you could actually go a little bit above that because companies don't necessarily have to have a low PE ratio, as we found. You can actually have a rising stock with a high PE ratio. However, just for your filtering criteria, you could have, say, between 30 to that 0. If it's on the minus, you might say, look, I'm not interested. However, they could look good from a technical standpoint. So there are multiple things that you can use here.
They could also look at earnings per share, obviously, as a way to determine whether there's a growth opportunity there. That's another thing to look at as well. But
yes.
I mean, the PE ratio keeps it nice and simple, but it's only part of the picture, isn't it?
100%. And we do go deeper into that in the course, in that module 1. That's one of the first things that students learn is that fundamental criteria and what to filter out. This is just, some criteria that we've picked out just to show a bit of an example. So you could have that EPS, which is earnings per share, how much a company is earning versus the price of the current of the share.
So what would you do? In this case, you've got a list of stocks. You need to narrow it down to 10. If you've only got this information, is that enough for you?
Not enough to make a final decision, but it's a good starting point. You need to have some hard set rules to filter your stocks. You can't just say, because I like this stock, because it sounds nice, because my mate Dave said that it was good. You can't never trust Dave. It's always look at these kind of criteria.
I'm going to apologise for any Daves.
Sorry, any Daves that are out there, but you know what I mean. So basically, you need to have some type of criteria that you're filtering, and this is exactly it. If you need to have something like this, you could use an Excel spreadsheet. You can source this data from your broker, from platforms, open source platforms, and what we're really showing here is that method that you can use to.
Look, it's unbelievable to me to see that we've still got stocks that are sitting there with a PE of around 10 or 11. That have been going up. Like, there's one, Rio Tinto's just started to go up, but AGL was one in there that's done the same. We've got quite a few here, MyState, Origin, Orica, still okay. And then we get up into the 20s, but that just could mean that, okay, the PE is getting higher, but sometimes the earnings take a while to catch up with where the price goes, and then it slows down again, and then off it goes again. So I guess it's about understanding that process, isn't it?
Definitely, and you could even filter by the yearly range if you really wanted to try to see which ones are in that lower half of that yearly range, but still making a bit of a a positive change for the year. So they're at that bottom of the range. I wouldn't personally just on that. But it just shows how you could use this data.
Very cool. All right. Well, while fundamentals are important, oftentimes you will see it lag prices, as the team just mentioned there. For example, it's not uncommon to see price rise strongly, only to later see the company come out with a good announcement. And so how do you prioritise the analysis between technical and fundamental when doing research before you buy? Now, this is, I guess, the big challenge when you are, too much in one camp or the other, because it's happened so often. Some call it other names, and I'm not going to name what it is, but you do see price often rise for no apparent reason, and then you find out weeks later that, hey, an announcement comes out and says the company did XYZ, warranting that price rise. So what's your process in terms of that? Is it...
Well, see, in that scenario, clearly the chart is going to tell you more than what the fundamentals did, because the fundamentals were coming out after that announcement was made. But, often it's about just weighing that up. First of all, it's what you know, and some people are more fundamentalist and some are more technical analysts. But I think unless you have a bit of both, then you're only seeing part of the picture. It's also horses for courses. If you're a short-term trader, you're going to care less about the fundamental side of it and much more about the technicals. But if you are medium to long term, you still need to be able to use a chart and do technical analysis. You just can't avoid it these days, and it's going to become even more important in the next couple of years for you to be able to hang on to the profits that you're making at the moment, and not, because if when the crunch comes, you don't want to see yourself or your fund or your super fund or your account just go all the way to the bottom with the market. So it's so important to know the technical analysis. So from my point of view, it's always about looking at the chart first and seeing if the chart's setting up in the right ways, or is it already in a bull run? Can we make more out of it? And then looking at the fundamentals to drive whether it lines up. So on a more sort of specky stock, sometimes the fundamentals are not even lining up with what the chart's showing, but if you're looking to trade short to medium term, then that would override the decision, but it's about knowing what you're risking in terms of your capital at the same time. So dividends going to be important for someone who's more medium to long term. You're going to want the dividends, so therefore you need to know what's going on with the company's earnings, and are they going to be paying dividends going forward? What's their payout ratio and things like that. But generally, it's technicals first to see what the direction is, because you have to know. Fundamentals don't tell you when to buy, and that's the problem with it.
Yes.
And and results can change. You mentioned before, that was in the positive way. The stock went up and all of a sudden, hey, it's got a good result, but it can happen in the reverse of that as well.
And I think the most important thing you said there is strategy. Each strategy will have its own preference in terms of what is used best. But anyway, a year can be a long time in the market. So what do you need to know before 2025 in order to prepare yourself to take full advantage of what the market will provide next year. Now, Pedro, it's one thing to get in there and work with the market as it's unfolding. It's a whole nother ballgame to prepare in advance and say, hey, I think XYZ is likely to unfold. How am I going to capture the best part of this?
Yeah, great question. So a lot of that boils down to what Janine mentioned before, knowing your technicals, knowing your fundamentals, and that EPS, that we mentioned earlier, that you can have the forecast EPS, which forecasts a year out, a year or two out. So knowing that EPS is really going to help you to identify those stocks that are forecast to grow
Except
in
for
that
when
next
the market
year.
peaks.
Because
when the market peaks, you're going to be relying on the chart. Right?
That's when the chart comes in,
Yeah.
So you can use that as a filter, those stocks that are showing that positive EPS, but you also need to know your technical analysis and really knowing that strategy around where you're going to invest in the next year will really help you out.
Fantastic. All right, now if you spotted your favourite stocks for the 2025 in the list we showed you earlier, make sure you comment after the show. All right, now it is time to get to the best part, which is the charts. Janine, you're up.
All right, here we go, top 10. So Pedro and I looked through the stocks that were on that shortlist. Mind you, we could have picked 50. There's so many good stocks to look at the moment, and that happens
That's
in
a good problem to have, isn't it?
Yeah, so we've actually narrowed it down to a few quality stocks. So first one we've got is ASX. So the ASX tends to become more bullish when there's more mergers and acquisitions, more corporate actions taking place on the market, because they make more money out of that process. Now, at the moment, it's been in a long decline all the way into this low here in October. It's had a first move up, tested that low, it's come up, broken out of that high. It's in the early days, I think, of a recovery, and as far as how high it would go, the potential is to go all the way back to its high. It's quite possible there's some resistance around that $90 mark. So that's what we're expecting over time, and we've seen 1, 2, 3, 4, 5, 6 months up from this recent low in June 2024. But I quite like this one. I'm just looking at the prior high here, which this was, believe it or not, the GFC high, and it's come back to test that. Now, we've seen a lot of stocks, Pedro, come back and test those highs in the GFC and then take off and make new highs. So, this could be the early stages of that.
Yeah, I agree. I quite like this one, and I like that it's come back to test that level. If I would just zoom in there, it's come back to test it, and it hasn't actually closed below it, recently back in June 2024. We do have some short-term resistance, around this level here. It's currently closing around that level, that $70, say roughly around there. But it's not a very strong resistance level, I would say. So if it does break out of there, we don't really see many other levels that can cause any cause for concern. So we could actually have a nice, 30% to 35% upside.
Yeah, and sometimes these levels, we obviously put a lot of analysis into working out where the strongest point is, but sometimes you can have two levels close together. It could be lower down where we're identifying that level. But let's go on and have a look at the next one. This is just one of the stocks on our top 10. Macquarie, obviously, we talk about a lot. At the moment, it looks like it's actually just moving sideways. It's traded up to around $240. Again, this one, it's just broken out from this recent high. So there was this high in January 2022. It's only gone up by about 10.5%. So that was a significant high for Macquarie. It spent a lot of time going sideways. The fact that it hasn't really grown much from that point tells me that once this consolidation's finished, I'd expect another decent run out of Macquarie.
Yeah, well, actually, this is a great example for Reese's question earlier, isn't it? So this stock has actually broken out. And if we go back to the chart, you can see that, as Janine pointed out, it's gone up that 10.6%. And it has come back to retest that all-time high back in November 2024, but hasn't traded below it, which is a great sign. It's actually just consolidating sideways. So it's looking like it's coming down now. It's closing on the low. It could come back to retest that $220 level, roughly around there. And then, you could have, for short-term traders even, a lot of people say Macquarie, it's a bit of a boring stock. But, for short-term traders, you could get a little bit of a, 10% upside as well.
Beautiful. All right, next.
All right, the next one we've got is Rio. Now, what's exciting is the move that we've seen this week with China making that announcement.
Exciting, isn't it?
Everybody's just waiting. We're getting all these false starts off Rio and now. And again, this is another one that, we've seen the market make incredible runs, but the stocks like this haven't even gone anywhere for the past few years. So there's all this pent-up growth that is in some of these stocks. We just need to see the market think that there's potential coming up, it's often about perception rather than before fact, and then eventually fact follows often. This is why sometimes, if you're waiting for the fundamentals to catch up, you can miss out. So we're just watching Rio at the moment. This is early days yet, but it's back above that line, Pedro, on the left-hand side from that prior high. This is the GFC high in May 2008 that it made that high, I think, around there. It's tried to go through a number of times, once, twice, 3 times, 4. We've seen that high, it's come back again. Surely it's ready now to go through that point.
Yeah, now would you trust it if it does go above that all-time high? So, in the past, it has gone up. It took many years for it to come up. It only traded above it in 2021. But actually failed to get that long-term momentum. Now, if it does trade above that all-time high, would you be thinking that that momentum is going to continue, or would you be worried? Would you think that you'd want to see a bit of a retest of that level before it comes back up again?
It's like anything in the market. You have to decide what risk you're willing to take, and there's always that catch-22, like one of our questions earlier in the show. If you take it when it breaks out and then it takes off significantly, then you've probably missed out on a big part of the run. If you take it and then it pulls back, then you've got to then manage the downside risk, and that's just trading. So it's about deciding what the risk is, what the potential reward is, and then determining what your entry is. So that's Rio.
Perfect.
AGL, did you want to take this one?
Yeah, AGL is one that I actually quite like, and it looks like it's looking quite promising after this long-term downtrend. However, it has been a little bit disappointing. It's failed to really gain much momentum. We have a strong resistance level here around that $12, which it's tried twice now to get above it. However, we're still above that trend, that momentum line there. So it could come back to retest that line there, and it could actually trade sideways up in this triangle for a while. And if it does break out, say, around that apex of the triangle, we could be looking at roughly May 2026. So it could be going sideways for another year. However, if it does break above that level
in the short term,
I'd be more excited about it. So really, we want to see that breakouts
and why are you saying that? Is it because of what it's done in the past, back in 2012, 13 and 14?
Well,
it falls sideways all through there.
Yeah, all through that, exactly. You don't want to get caught up in that whole move around that 2014 period, even from 2007 after the GFC crash. I don't think that the personality of the stock looks like that. I think that the personality has changed a lot, and just
it's more
by
pushing
knowing
up, isn't it?
It is. It looks a little bit more bullish by the higher peaks and higher troughs. And just because what's going on in the macro environment, all these things happening with energy and so on. So I think that they're getting into some exciting areas. You could see some innovations coming out from the company as well.
Yeah, it does really look like, you raised a great point there about the fact that when you look at the character, it does look like it's much more volatile than that period back in 2012, 2014. But
definitely.
I like it. Next one.
All right, next one is Cochlear. Did you want to talk about this one?
Yeah, well, Cochlear...
I want to try to be fair here.
Yeah, do you? Okay. Well, this one was one that you actually liked, and I'm not sure if you did or not. I'm pretty sure that you did. If not, then you like it now. So, I actually wasn't quite... quite convinced on this one, because
you're concerned about those peaks.
I'm concerned about those two peaks. The fact that it tried to break above that 350 and then basically did the same thing again, 350, pretty much on the dot, and then had this very bearish down bar on that weekly, closed below all of this consolidation that it took, so long to create, and just to break that just without any hesitation.
But I mean,
it's a little bit concerning.
Given the nature of this stock or this company, it is one of the biggest players on our market, particularly in the sector that it's involved in.
Yep.
And throughout history, it's proven time and time again that, hey, you bet against it. Eventually, it's going to make you look a fool.
Yep.
With those peaks through there, are you thinking it's more of a, short-term, I guess, profit-taking more so than something systematically wrong with this company to be considered one that you throw away completely? Because you would argue Cochlear, every time it goes down, it presents more opportunity.
It can be
than
volatile
fear.
on the downside,
Right.
though.
And I think you the key word is eventually, and that's what we're looking at. It's like it's at the moment for me, it doesn't look very good, but I wouldn't discount it altogether.
It is
100%.
a classic growth stock, though, isn't it?
It is a classic growth stock in the healthcare sector, which we're expecting to do good next year. So put it on your watch list, but for me,
Just
not
not yet.
quite right yet.
Yep.
All right.
Wise words spoken from you, Pedro.
Oh, thanks, Janine. That's wise words spoken from you about me speaking wise
So
words.
by the end of the year,
Wait, hang on, you guys are getting along too much. You're
Hang on.
supposed to
I'm
be
just about
arguing.
to challenging him. By the end of the year, do you think that Cochlear is going to be up, or are you saying it's going to be down?
Oh, okay. Well, this is
Next
going to be
year, 2025?
recorded. So, yep, you got to by
Mark
the
my
end
words.
of 2025. End of 2025 possible, because I'm expecting the healthcare sector
You're
to
staying
do
on the
good.
fence, aren't you?
Like a
So
true politician.
possible,
Well done.
yes.
Well, I'm
Excellent
saying
answer.
up. It's going to be up by the end of the year. All right, Fisher and Paykel, or Paykel, shall I say,
Yep.
healthcare. Very nice stock. Extreme boom we've just seen on this one, and a bit of a sideways consolidation now. But it's just broken out through that all-time high. So this isn't really, once it gets through, it's called blue sky. Far less psychological resistance for the stock when it gets through there. But as you can see, and it's great that we had these questions earlier about this sort of thing, but we saw a month down so far, and it's trying to get through that, and we can see how strong the resistance is. So far this month, the close is towards the low. And that's why sometimes you've got to be cautious, or just make sure that you've got the right entry strategy to buy above these highs. It may not come down far. I mean, let's just have a look and see where, if we set a 15% stop loss on this 1 cent above that high, the trough is 10, 15% would bring us back down somewhere here. So, I mean, it's got a fair room to move before you would even get pulled out on the exit if it does come back that far. But if it keeps going up again, I mean, it could easily, you look at how this stock has formed, indicates that it could easily head to $50, over the next couple of years when it gets going again. But it's just a question of timing now. So, I wouldn't be jumping in right away just because, there's a potential for that upside. I'd be looking at waiting for it to prove that level, like Pedro was saying before. Once it gets back through, could be a really good one on the list.
Fantastic. We've got another one, I'm sure.
We do. And this is one that I actually liked, Insignia Financial. I'll take this one. I'm jumping quick on this one. So let's start with the monthly chart. It is quite a volatile stock, as you can see. We've had these, massive drops back in, that's the GFC back in 2008. And then we've got 2018. And it was quite bearish all throughout. But it does look like it's found some support there. If we can put a horizontal line back in the GFC low, it looks like it's come back to retest that, and it has gone, around that level. This is the monthly chart, so these are, each month has failed to actually drop below it, and now it's actually shot up and gone out of that consolidation.
That's
However,
interesting.
it's quite interesting that it's it's failed to break that. But now we've got some resistance around this level here, say that $3 something, and if this horizontal line doesn't want to play, but I'd say just a little bit lower than that $3.80. We've got some short-term resistance, but any break above that, I actually do quite like, and I think that the next level could be about $8.
What's interesting with this one, and I'll get your thoughts on this, Pedro, is direct contrast to the stock before, Fisher and Paykel trading at all-time highs. This one's trading near the lows.
Yep.
Yeah.
Is the strategy implemented different because of the nature of where those stocks are in terms of maybe time frame of trade, or is it just, hey, your rules are triggered, I'm buying either option the same?
Yeah, great question. So that depends on the strategy, whether you're trading mechanically or more using the art of trading. But I do quite like myself the ones that are coming out of the lows, because you've already got established lows and highs that you can go off to then identify your levels. Whereas if it goes to blue sky, yes, you can buy, but where do you sell? Of course, you'd have to back test the stock and have your strategies also. But I do like the fact that you've got these lines in the sand that you can implement, such as that $7 level.
Fantastic.
Beautiful. I actually like blue sky, so
you do.
We have a bit of a discussion about that.
Well, hopefully the next
show.
Blue sky.
All right. Okay, this one is actually made blue sky recently, and it's now coming back to test that level. So there was a nice little trade there.
That's what happens when you reach blue sky.
Yes.
Wow.
I love it. The gloves are out now, aren't they?
Oh, yeah.
This one. All right, so look, what tends to happen is you can get some good short-term trades, but if you're more medium to long-term, you might be trading on a monthly chart, and therefore your exit could be completely different. But you know, this is shown to have made 20? It could come back 20%, but on the upside, around 30% it made, let's say 35%, 37% potentially, which is decent enough to get a trade out of.
Yep, yeah.
All right.
So just wait for this one to turn around and come back up.
Into that blue sky again, I'm sure. But next stock, we've got to be quick on this one if we can.
Okay, next one is Origin. Now, Origin looks lovely, doesn't it?
Oh,
We
it
both
looks
like
beautiful.
this one.
All right, we'll agree on this one.
You
This
can
is
go for it.
trending very nicely.
Or do you want to? Are we going together on this one?
Yeah, we'll go together since we both
Okay,
agree.
so let's just have a look at some natural levels across here. So we can see that it's actually sitting nicely above that at the moment, which is great. So it's through a major hurdle for this stock right now. And now we just want to see it settle down and then continue the angle of the trend. We can see that angle just moving up there nicely. And this is just sort of setting up beautifully to take off. There's some serious resistance overhead at around $14, $15, but plenty of upside in there for 2025.
Yep. And that just proves the point that even though the overriding energy sector might not be performing on a yearly basis, there are still stocks, you can find them in these sectors that are doing really, really well.
Exactly.
Yeah.
But all right, I won't hold you up. One more if we can get through to it.
Okay,
Hey,
fantastic.
one more, let's see what we can do.
Orica, we actually had an extra one too. We put in 11 just in case we could sneak one through.
Well,
but we've got
we won't have time for that.
And Orica's really quite choppy. It's quite a volatile stock over the history, you can see. But the fact that it's come back, found support on this really nice level underneath all of this, looks like it bodes really well for where it's going. There's a sideways consolidation that's formed now. And I think once it gets back and through the top of that again, we'll be on its way and heading towards that prior high. So
I like it too.
You like that one?
Yep.
Okay, vote of confidence.
Some agreements.
Vote of confidence.
Fantastic, guys. All right. Well, thanks for that, team. Now stay with us as we'll be right back after this short break. This week on Talking Wealth, join Eric Brotman to find out how financial wellness programs can enhance your financial stability.
A lot of folks don't have a tax advisor or a financial advisor or even a family lawyer. And it's important to have that team of people. And not everyone has it, not everyone knows where to find it, and not everyone realizes that it can be affordable.
Find out how Australia's energy shift is creating wealth opportunities with Rob Sherwood.
The energy markets are getting smarter and faster in a way that will have a bunch of interesting knock-on effects. Either that there's an industry that's not viable now that might be viable in the future, or vice versa. Those are great bets to make.
Learn how innovation and leadership are reshaping gender equality and financial security with Pascal Haley-Amore.
Women in Australia retire with anywhere between a quarter to a third less superannuation than men. Not only are women retiring with less money to begin with, they also live significantly longer. They're going into retirement typically with only enough money for 8 to 10 years of retirement.
Pedro and I discuss, should you be buying the dip on Woolworths?
It's now down, roughly around that 30%. So it is in a bear market.
Now since, making the all-time high, we're stuck in this sideways, choppy, downtrendy type market. So if you're looking for a 10% rise really since the all-time high, that's all this stock is offering you.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth. All that and more only on Talking Wealth. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 9290 9988. That's 03 9290 9988. 8888, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Angelo is asking, can you take a look at RMS? I exited a couple of weeks ago as it triggered an exit, having been in the stock for the last 12 months. However, I would like to see it trade and close above the all-time high before I look to get back in. All right. Now, Pedro, I'm going to go to you on this one because...
Yeah.
Because he doesn't like all-time highs.
Yeah, that's exactly right.
That's right, Angela. I'm with you on this one. And Angela is actually one of our students. So he mentioned that he picked it up 12 months ago. Good on you, mate. Really, that was
a few new students lately.
Yeah, we have actually. And shout out to my new student now. I won't mention his name, but we just had an intro call, and he said that he'd been watching...
First name. He might
Mike. How are you? And he was actually watching the show for a long time, and he was kind of on the fence
anyone
whether
else?
to.
Anyone else you want to say?
All right, I would like to say hello to family, mum. No, but really, he'd been on the fence for a while now, and he'd been watching the show for many years, and he decided to take that leap. So good on you, mate, for getting on that.
You just made a big mistake, mate. You said your mum first before your wife.
Oh no. She's the one that feeds me, so there you go.
Can we get to this stock, please?
Angelo. Now, he picked it up at a great time. Let's get onto the chart and see what he's done there. So 12 months ago, if we're going exactly 12 months, so that's what, around November last year. So he's actually up quite a bit there. You know, if he's exited around these levels, 40%, that's an excellent trade. And you're right to be cautious around these all-time high levels because this was a major turning point for this stock back in 2020 where it just took that major dive. So I think it's a smart play to see how it unfolds and then to see maybe if you want to get into it again. Whether you had rules or not, I'm not sure.
Yeah, he did. He wrote in the email that there were rules to get out.
And he took them.
And he took them, which is another tick because, you know, how many traders... One, they don't take the rules, but then there's also the other psychology behind it when you do take an exit and then they don't pull the trigger to get back in again because you can always get back into a stock again a second, a third, a fourth time. There's no, you know, just because you've taken a profit, you don't want to sit and, you know, find people want to hold that profit and say, hey, I made money on this stock. I don't want to ruin that by getting in again. Yeah,
that's right. They don't want to get those losses back. And it's okay if the stock keeps running on you and you miss out on a few things. But great trade, Angelo.
Fantastic, Angelo. All right, we now have a caller on the line. Welcome to the Australian Stock Market Show. Who have we got on the line?
It's Matt. How you going, guys?
Good, Matt. Thanks for calling in. What's your question for us today?
I actually bought into Kogan last week. I've been waiting for probably 4 or 5 months to get back into this one. I had a good trade on it last time. Just wondering what your guys' thoughts on it are. There was a little bit of a volume spike last week as well. Yeah, I think it's broke through a little resistance over where it was at as well. And I don't see resistance till about $6.80 around that mark there. So I was just wondering what your thoughts are.
Fantastic. Now, is this more for a short-term trader type trade or is it for a super, more medium, long-term portfolio?
Look, I'm trading it short, but it is bought in my super. Okay. But if it turns into a longer trade, no problem. But yeah, it's probably the riskiest trade I've got in my super. I've got like 7 stocks, but I always just leave one that has a little bit more volatility to it, and this is the one which I've been waiting for a while. So, yeah, I am watching it closely, but yeah, I've traded it before and I've back tested it, so I'm pretty confident on it. But I just thought I'd get your thoughts because it is my riskier one in my super.
Absolutely. Thank you very much for your call, Matt. Now, Janine, I love everything he's talking about. You know, even though it is for the super, he accepts and understands the risk, which is a big tick for me. Chart look good?
Yeah, and he's back tested it, and he's one of our students or ex-students. So congratulations, Matt, and well done. And looking at the stock though, you know, it's really horses for courses in terms of what to do with this one because it depends on your risk appetite as to whether you'd be in this or not. And you're right about that resistance level. Well,
he's accepted the risk and he's gotten in. So
well, if you're in it, then you're just going to go with it, aren't you? I mean, you just run with your. Preferred to see something a bit more concrete on the monthly than off this bottom here after that big fall like that. But then that's my, my biases on this. So I think, you've got your entry, you're with it, you just stay with it and you've back tested it. So you've just done everything right. And look, the next level that's up from that is just a way up. It's all the way up here somewhere. So it's somewhere like $9.
Well, he did mention $6.80 as a possible resistance.
I can see it, it could come all the way back to that level again. And I mean, this could be the start of the next pattern, and you'll know what I'm talking about. But this could be the end of a long-term low, and this is the start of the first move in the pattern before it then takes off and even eclipses that level.
Definitely.
So well done anyway in taking it and having the courage to follow your rules.
Fantastic. Did you want to say something quickly on that one?
No, actually, I do agree that level, that's that previous resistance level back here, that's going to be your target there, that high of $8.30. I think that if you can get to there and maybe be able to get a nice exit out of there, you could have a nice 50 to 40% profit there.
Fantastic. All right, we do now have a text from Daryl, aka Huru, who is asking thoughts on MGH, looking medium to long term when trades through $5.05 level, stop loss at $4.40. All right, Pedro, MGH, he's got a stop loss, he's got a trade through.
Yep.
Looking to get involved.
Yeah,
Yes
I like
or no?
it. Yeah, well, great. Yeah, let's have a look at the chart. So I do like that he's got that trade through on the pattern, and there's a few continuation patterns there, and Janine's just put those lines on the weekly chart there for you. So you've taken that entry, so roughly, what was it, $4.80?
$5.05.
$5.05. Okay, so he's got in on that high there. Now it could just be facing a little bit of short-term resistance there, because we did have that test of that $5, and that $5 seems to be a strong resistance level. And maybe in hindsight, you could have waited until it traded above that $5.
More clearly. Yeah. I mean, what was the high of that one there? Sorry, what was the high of that?
$5.05.
So he got in 1 cent above.
1 cent.
Triggered.
Yeah, right. So he's taken his rules mechanically, and good on you. You sometimes need to do that. What I do like is that it's on a long-term uptrend. So stay with it. It could actually pop up above that $5 level.
All right, fantastic. Well, we do have another caller on the line at the moment. Welcome to the Australian Stock Market Show. Who have we got on the line?
G'day, mate. Yeah, Peter. How you going, Phil?
Peter, good, mate. How are you? Thanks for calling in.
Good.
What's your question for us today?
New Hope, NHC, on the weekly chart, and it's triggered one of my buy signals on there today while I was at work, and it's closed a bit higher. But just seeing what your thoughts are, and maybe should I take the signal, or maybe should I wait for around that 5:30 mark and go through that? Just seeing what your thoughts were.
Fantastic. All right, we'll pass this one on to Janine. Thanks very much for your call. Now,
awesome.
Very interesting, and that sucks a little when you're at work and the trade goes through, and
there's nothing wrong with that if
you don't get in.
But if he's going to get in now, it's probably better.
Well, yes.
To wait, because it's looking good, Peter. Everything you're saying, you've got a good stock there. The only thing I'd just be a little bit cautious of is just on the monthly chart, we can see that it's not quite through the angle of that downtrend yet, so it hasn't proven itself. But short term, like you say, it's triggered something. I guess for my money, I'd rather wait for it to get through that point there. Now, in saying that, if you wait for that, there's a possibility it could shoot through. So you have to be prepared and look at what your upside is and be thinking about what could actually occur. Now, a lot of people that I've coached over the years, they can tend to sort of take what we teach and not actually be thinking about all the what ifs, right? So what if it actually goes up really strongly from here? Are you still going to take it? I mean, how far above this point? If it keeps going up and you haven't bought it yet and it goes about 5% above that, well, what's your upside? You've always got to be thinking about the risk reward and whether to still take it. And if you miss it, there's always going to be another stock, and this one could give another entry down the track. But at the moment, maybe even a weekly close, waiting for the end of the week and seeing.
So are you saying from what you're looking at right now, there's potentially a bit more negative than positive? The stock needs to get through a little bit more to give you that safer confirmation?
Yeah, because it's not through that trend line on the monthly chart yet, which is a little bit of a risk short term for you, Peter. But it is starting to show, so it's showing only the very first sign of a move up. The earliest possible entry that I see that would be reasonable to take would be to wait for the weekly close, but then you've got to weigh up the risk of this resistance that I've identified here. So it's really your call as to the risk reward scenario, and I'm sure he's wanting to try to keep his stop loss tight.
Yeah. All right, Peter. Well, there you have it. Not just yet from Janine, but anyway, great question. Thank you very much. Our next question comes from James. I recently purchased CDA last week at $16.44. This stock tends to have a history of consolidation before continuing to trend higher. Whilst pullback has commenced this week, I am not concerned as I have my stop loss ready at 15% if required. Short to medium term time frame, and keen to know your thoughts. All right, Pedro, there's a stop loss in place.
Yep.
All in order?
I like it, and this is actually a stock that I've traded in the past, so I'm very familiar with it. Actually, when it had this run up back in 2020, I was trading it. Obviously, I stayed out of this down move here, but I know what he's talking about with the consolidation pattern. So if we look at the weekly chart, it does have these periods where it consolidates and then takes off. Consolidates, it actually consolidated for a while there back in 2023, but then shoots off. So you do have to be a little bit patient with this one and just hold on to it, and then it will reward you. Now, at the moment, we're at one of the last consolidation patterns before that, that all-time high. So it's got about another 17% more to go, where it could face some resistance, but it could actually take off above that because it's been doing quite well. I know that the fundamentals align with this one as well, so I do like that you've taken your entry and you've set that 15% stop loss, and it does seem to align with that previous low back here. So you could draw that line in the sand that if it does drop below that $13.75, I like it. It could just be patient with it. It could actually reward you.
Now, is that enough of a risk reward scenario? If from your perspective, if you're looking at trading that, there's about 12% upside versus 15. Is that something you're liking?
17% versus 15 is not really good for myself. I wouldn't take that. I don't think that there's enough of that ratio for that profit and loss. So you could actually set a tighter stop loss if you wanted to, below this consolidation pattern, and that would actually give you a bit of a tighter one. So maybe you could risk about that, 8%,
or even under the low,
or even under that low. But even still, it's only 7% more than what you'll tend to gain.
Well, you raise such an important point because, with trading, it's one thing looking at or identifying the opportunity on the chart, but then there's a whole nother world in how you structure that trade to get the most out of it, because really you can turn a trade that doesn't provide the best risk reward into one that does, potentially a little more risk, but you can really give yourself an opportunity to capture something worthwhile just by knowing how to play that, where you place your stop and how you look at that trade, maybe change time frame, think of it more short term than long term. So many options there, but great stock choice. Thank you very much. Now remember to show your support for our channel and smash that like button if you enjoy watching and want to see loads more of our content. Click subscribe now. Subscribing helps others find our channel so we can help them too. Now before we let you go, what was your favourite part of the show? Was it Pedro's hot stock tip, our topic for the night, or was it a viewer question? Let us know by commenting below, and thanks to all of those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we discuss top Australian stocks, ASX 200 sectors to beat cash in 2025. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. And if you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you will always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck, and good trading.